Hey, what's up you guys? Welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. I'm Carson Rouse, and today we're going to be talking about something that isn't going to be as happy or go-lucky as most of our videos are. Might be a little bit darker themed. We're going to be talking about the Robinhood trader who recently committed suicide. Somebody took their own life, and unfortunately this is not that uncommon when it comes to the stock market. If you're having any similar or bad thoughts like this, I am going to leave a link in the description for you to go get some help. My real goal in this video is to educate you guys about the real dangers that exist when you're trading in the stock market and how you need to be responsible. So who was Alex Kearns? Alex Kearns was a college student, a 20-year-old from Illinois who really enjoyed learning about the financial markets and was getting his feet wet in investing. During this pandemic, he decided to download and use Robinhood, the commission-free trading app that I'm sure you have all heard of. This app is very, very popular among millennials who are just getting started investing in the stock market. From what I found online, it appears as though Alex Kearns was beginning to toy around with options trading with margin. If that sounds like Chinese to you, let me explain. Options trading is a very risky style of investing that can potentially give you a much higher reward, but it also has a lot higher of a risk and it can lose you a lot of money. You're basically betting that a stock is going to reach a certain price by a certain date or time, whether you're bullish or bearish on that stock, aka it can either be a call option or a put option. With certain kinds of options trading, you can actually go into debt, meaning that you can rack up losses that you then owe. So not only are you losing your money, you owe money. Not only that, but Alex coupled this with margin trading, something that I would never recommend to any investor of really any experience level. Margin trading is taking out money as collateral to invest in the market, aka you're taking out a loan and you use that loan money to invest into stocks. This means that you have more money to put into the stock market. So if you do build up good returns, your good returns can go to great returns. However, if your stocks drop, now you owe money and you're in the negatives. After Alex toyed around with some trades, a negative balance of $730,000 showed up on his account. This is absolutely crushing, and I can only imagine what that would feel like. I mean, you'd feel as though that your financial future is screwed, like you're gonna be owing that money for a good chunk of your life. Not to mention, Alex was a kid who was focused on saving money his entire life. He loved finances, he loved saving money, like I'm sure a lot of you guys do. And to see negative $700,000, that would just crush anyone, especially somebody who loves money. Of course, I am not defending his decision to end his life. That was not an option. However, I'm just trying to explain how trapped he must have felt. He also wrote a note before he took his life, and in this note he stated that he never thought that he allowed for margin trading. He also added that with the trades he made, they should have canceled out and this debt should never have been accrued. If you want to know more details about the potential trades that he made and how this debt really came to be, I'm going to leave a link in the description, a Forbes article if you want to check that out, if you want to see more detail. In his note, I'm going to paraphrase here, he stated that how can a 20-year-old with no income rack up almost $1 million in leverage? However, guys, the true shame of all of this is that Alex Kearns may never have truly been in that much debt. The $730,000 negative cash balance may truly have just been unsettled options trades and the stocks that were tied up in all of that. So in reality, it was more of like a glitch in the app. Either way, I would really not be surprised to see Robinhood get sued badly over this, even after they released a big statement of grief. Robinhood also came out and made a statement that changes could be made to who is allowed to perform options trades. They might beef up the requirements so not just any Joe off the street can do options trading. They already have some requirements and they do your history, but there could be more coming in. Again, the lesson here is to always be safe and responsible with investing. This is not a game. This is your money and you can go into deep debt and you can lose all your money. A single trade can ruin your life. But an even bigger lesson here is that you're never truly lost in life, and suicide is never an option. Even if you did rack up $700,000 worth of debt, your life isn't over. It's never over. That being said, just stay smart, stay safe, and keep investing, but wisely. Business Buzz out.